afternoon. Time to check in on the markets. And as we see on the screen, global markets hitting their two-year low with bonds on track to having an 8th week of losses as investors fret over the prospect of more aggressive interest rate hikes from the United States. We've also seen on the currency side very volatile after Japan stepped in to prop up the yen. When we look at what's happening from a European markets perspective, a sea of red with everything down from banks to technology stocks as well as natural resources. About a couple of hours ago, we had UK Prime Minister Liz Truss's government deliver their mini budget, announcing the most radical of tax cuts that the UK has seen in 50 years. And just reading it out for you, scrapping the top rate when it comes to income tax and the cap on bankers' bonuses. That has sent markets into a frenzy. But locally, when we see what's going on here, Text and Property Fund releasing their earnings, taking a hit, especially when they mention the fact that they've been unable to replace office tenants as much as, or rather at the same rate as they've been seeing office vacancies. But to talk to us about the latest when it comes to the markets and look back at the week that was, we are joined by Warwick Lucas from Galileo Securities. Warwick, thank you so much for your time. Before we even check in on the JSE, I actually wanted to do a sort of a month overview of the JSE. How are markets reacting to the UK mini budget with those tax cuts? I mean, looking at bond yields spiking.
Well, I think as a whole, we've had a pretty tricky month and a very volatile month. I mean, the JSE itself on the all-share index is down at least 10% over the last calendar month, and moreover, it's done it in a very zigzag fashion. We saw it come down quite hard at the end of August, rebound in the middle of the month, and then a further surge down in the last couple of weeks. So very choppy indeed. I think as far as the UK goes, I mean, clearly they're trying to strike out a different path. But the policy laid out by the government there, I mean, it's an attempted growth path, sure, but they're going to be running up against a Bank of England that is quite clear that they are going to be, like many other central banks, pursuing quite aggressive and constrictive, economically constrictive monetary policy in the months ahead.
Speaking of monetary policy, we had the South African Reserve Bank deliver their interest rate decision yesterday. Should we be expecting at least one more rate hike, and how aggressive can they get?
Well, it's always a bit of a tricky one with SAB because they're operating in an environment where you really have a pretty weak economy, which is still showing a lot of signs of inflation. So there's always that background behind their decisions, but at the same time they're facing the problem of imported inflation, where we're not an island. We exist in the midst of the global economy. I mean, interest rate policy at this stage is actually not neutral, and one of two things has to happen: either inflation needs to start rolling over, or rates need to continue to go up, and the gap is about 1.5%. If I was to take a quick guess at where it might go, I suspect we probably see another 0.5% in rate hikes to come, and hopefully about 1% coming in CPI rolling over. But of course, the future, as we know, can be very, very noisy. So that is at best very much a thumbsuck.
Your reaction to the Fed meeting this week?
Okay, so the Fed, of course, is a global interest rate big gorilla because it's obviously the currency in which most global debt is created and borrowed is the US dollar. And the Fed's action this week pretty much backs up the narrative that came out at Jackson Hole last month, which was pretty much the Fed saying we're throwing the glove down on inflation now. So 75 basis points, or 0.75%, is certainly a brisk move in the US. I mean, the sort of headroom that we're looking at for potential further rate hikes in the US is possibly as much as 1.25%, which is quite a lot. But I think what they obviously want to do is see how the tightening goes and what the impact is. So clearly there'd be some further staggering. But I think, of course, the Fed is very important because our own SARB, in an attempt to keep at least currency stability, wouldn't want to be left behind by the Fed, causing our rand to collapse. So they would be looking at that and keeping it somewhat in line. I mean, our recent hike is, I think, partially a nod to the importance of the Fed in the global equation.
Warwick, thank you so much for your time this afternoon. That is Warwick Lucas from Galileo Securities. And then throwing into next week, we are expecting speeches from various US Fed presidents. And on Tuesday, we're expecting OPEC to publish their world oil outlook. So we'll unpack all of those developments and some of the comments coming out of the Fed presidents, as well as the ECB speech from Christine Lagarde on Monday. That is it from me. We'll have more markets news for you next week. We're going to take a quick break. When we come back, we'll have more news for you.